Hello and welcome to NDTV Profit. You're watching IPO Adda, and my company in focus today is Emcure Pharmaceuticals. It's a company which is coming out with an IPO on July 3rd. Price between 960 to 1008. It's a fresh issue of 800 crores and OFS of 1152 crores, taking the total IPO size to 1952 crores. And joining me today is Satish Mehta, who is the MD and CEO of the company, and Namita Thapar, who is the whole-time director of the company. Mr. Mehta and Ms. Thapar, thank you very much for joining us on NDTV Profit. To begin with, Mr. Mehta, you're raising 800 crores in fresh equity. Can you take us through what is the purpose of this 800 crores?
No, so basically, as far as 800 crores are concerned, we are raising this money now for reducing our debt.
Can you give us an idea of what is the kind of borrowings on your balance sheet as of today?
It's around, on 31st of March, it was around, ballpark figure of 1500 CR. So it's very much, within the covenants, but at the same time, we want to reduce the debts. That's one of the reason, for raising 800 CR.
Namita, give us a sense of the kind of domestic market you are operating in. Which are the segments that you operate, and which are the and in each of the segments, what kind of market share do you have?
So Sajid, as you know, the Indian pharma market is extremely progressive, going to grow at 8 to 9% going forward as well. And Emcure is in 19 therapeutic areas with a pole position in Gynac. In fact, we have a 13.5% market share, which is about a 5.5% lead over the next player. So extremely strong in multiple segments, whether it's Gynac, cardio, HIV, vitamins, gastro, and definitely with a strong focus on women's health going forward.
Give us also a sense of the kind of development that you undertake through R&D, because I was looking at your R&D expenses. It's been coming down as percentage of sales at 4.6% for FY24. Is this an aberration, or you will go back to the normal mean of 5.5% that you've been doing for the last couple of years?
Sachit, this question I will take. As far as the company is concerned, I have built this company from scratch, because I started this company in early 80s. I'm a graduate of IIM Ahmedabad, and I'm the only person who did not opt, for any placement because I want to do something on my own. So while building this company, and when I decided to market my formulations, in mid-90s, 96, 97, at that time I realized, in a fragmented market, if I want to do well, in that case, I must have differentiated products. So that's how, this research and development is very, very close to my heart. Incidentally, I am also postgraduate in organic chemistry. So the company has been built on technology, innovation, and that's the way, we have gone about. So that's the reason my company has given maximum number of new products, whether it is chirality or for that matter, biotech products, or for that matter, iron preparations. So this is something that we'll continue doing, and that's the reason as far as R&D is concerned, we'll keep on spending. And there 4.5 to 5%, that's the range we'll continue doing going forward.
Give me also a sense of while you've grown at CAGR of 6.5% over the last 3 to 4 years, for FY24 your profits have fallen by 6%. Give me a sense why the profits have fallen 6% over FY23.
Now, one of the reasons, what has been happening, that we have invested in the new facilities. That is one thing. So that's the reason that is also pulling down the profit. The second thing that has happened in the domestic market, we are also going in for reach and penetration. So to that extent, we have added close to 1,000 people in Zoventus and close to 700-800 people in Emcure, because we want to go to tier 2, tier 3 cities, and also going for more reach and penetration. So getting these guys back to the normal productivity that we had will take some time, and that is getting reflected in the lower profitability. But that's I will take it as an investment for building the company going forward.
So for how long this investment will take place? Means you are expanding your market, you are expanding your reach and distribution as well. So is it fair to say that it will take a year or two before you go back to normalized growth once your investment into penetration and reach is fully done?
Yeah, you're right. It should take between 18 to 24 months, and this is being monitored, on monthly basis, because in our industry, what really happens, the key to success is execution. So that's one area, which is very closely monitored by all of us,
Give me a sense of your EBITDA margins as well. For FY24, it was around 18.5%. It's fallen from 19.7. I assume that the increased marketing and distribution is the reason for that. But is the margins going to remain at these levels, or there are enough levers for you to pull it back to about 19% and closer to 20-odd%?
In the current year, as far as we are concerned, we are giving guidance of 20 plus in the current year. And in next, 2 years, once, we start better utilization of our facilities and also start, getting the, what I would say, momentum because of the additional field force, that we have, we'll give guidance of 22.5%, in next 24 months.
Namita, if I look at your segments, gynecology is the biggest one, and you mentioned it as well, followed by cardiovascular at 16% and anti-infectives at 11%. What is the kind of growth triggers you have for especially cardiovascular and anti-infectives? Is there enough product pipeline in place for you to push growth there?
Satish, if you don't mind, I will take this question because you must be aware of the fact, very recently we entered into in-licensing arrangement with Sanofi, as a result of which, as far as cardiac segment is concerned, we are in top 3 now as far as cardiology is concerned. So to that extent, apart from Sanofi pipeline and the products we are developing in-house, so we are very, what I would say, bullish about the cardiac segment, and as you know, that is one of the top segment in the industry. And as regards anti-infectives, so it's a question of reach and penetration, because we have increased our field strength in Zuventus, and we incidentally have a lot of mega brands, and we have sufficient scope to grow in those areas. And of course, as we go along, we will also look at new molecules which we can introduce.
Absolutely, Sajid. And as you know, both the acute and chronic segments are poised for very strong growth. So we have a good presence in both areas, acute as well as chronic, and we'll keep focusing on this with the investments we made in the additional field force as well.
Mr. Mehta, if you can give us some more light on the Sanofi tie-up that you have, what kind of revenue potential will be there for you going over the next few years as you play out this in licensing agreement?
It's going to be quite significant. I mean, I can't give you the numbers, but at the same time, it is one of the better deals that has happened in the industry. And we have been able to get some marquee brands like Cardace, Corderon, or even for that matter Clexin, and we are quite upbeat about it.
Namita, some of the top brands that you have in the markets like Orofor or Metapure or Jostum or Bevon, these are some of the 4 or 5 big brands that contribute a large portion to your revenues. What is the plan that you have to de-risk yourself from these brands, and what are the kind of other pipelines, product pipeline that you have, so that your revenue can be diversified further?
So Sajid, you asked my favorite question, and thank you for that. So one of Emcure's strengths is making big brands bigger. If you see 4 years back, what we define as big brands, we had 40. We're 63 right now. We've really mastered the art of picking areas where there's a white space, where we have strength, and then doubling down on that. So you mentioned brilliant brands, Orofor XT, Bevon, all of those, we will double down. We will make those bigger. We also have a strong R&D pipeline, some exciting new launches. And so between our new launches and our big brands, we will make sure that, something that's Emcure's strength, that is brand building, will reflect in both the top line as well as the bottom line.
Satish, if you allow me to add, let me tell you one thing. We were the company, which introduced third generation thrombolytic tenecteplase, for stroke for the first time in our country. And here, Altiplase, the second generation, is being marketed. And this particular product, we launched only 3 or 4 years back. And in 3 years, we have built a brand of 50 crores. I'm just giving you one example. And as far as this particular brand is concerned, it has a lot of potential because a lot of unmet needs, as far as the stroke is concerned. Okay, so there are a number of brands which are in the range of say 50 to 100 that we can take it to 100. There are lots of brands which are 25 to 50. So to that extent, I would be inclined to make a statement that the portfolio is fairly widely spread. It's not that that we are depending only on few brands. So we have multiple divisions. So each and every division has big brands, that's what we do. Even for that matter, to give you some example, we launched Vildagliptin, when it went off patent. And that also is a brand, of 50 crore plus. So we take pride in telling everyone, that we are brand builders, and that's what we have done.
And Sajid, just one quick point. My father gave an excellent example of stroke. As you're well aware, the biggest problem in India are the 3 A's, right? The awareness, access and affordability. But the awareness remains the biggest gap. And so whether it's Orofor XT, where 57% Indian women are anemic and most don't know about it, or stroke that he mentioned, the biggest gap that Emcure is really taking leadership in is making more Indians aware early diagnosis through these multiple camps and workshops that we do, and then that has a dual purpose, right? You help people become aware, early diagnosis, as well as build sales and make the brand bigger. So this is something that we're truly committed to in areas like stroke, anemia that remain big gaps in our country.
Mm-hmm. No, Namita is very modest, Satish, because she also runs a program. Uncondition Yourself, for which she gets in touch with all the big doctors, opinion leaders, and keeps talking about various things where not necessarily in the areas in which we are involved. She keeps on doing that. So I think it's a holistic approach that we follow.
Yeah.
Mm-hmm. Give me a sense of, sir, your revenues, because for nearly 48% of your revenue comes from third-party manufacturing. Is that the model that you're going forward with as well, or are you going to bring in those manufacturing at some point in time?
No, generally speaking, all companies have a mix of, in-house and outside. So to that extent, one of the things, Sachita, I will tell you that all the marquee brands and the brands, which are R&D driven and where we are vertically integrated are by and large, are made in-house. Like say, for example, Biotech products, obviously 100% made in-house. So I can't give you any standard answer, but at the same time, there is no risk involved really, because most of the important brands, which are technology driven, are essentially in-house.
So give me a sense of where are we on the Biotech brand, and what kind of contribution that it has to your revenues at this point in time, and if you can also shed some light on the kind of product pipeline that we are seeing or we are going to see on the Biotech side.
No, in Biotech, I can make a very generalized statement. That's one area where we are probably better placed in relation to the other companies, because we have a platform of CHO in which we have already launched 5 products, and we have pipeline in CHO. Then we also understand E. coli. And the other platform about which personally I am quite excited is mRNA platform. We have the mRNA platform on which going forward we can also work on vaccines. So I think in next 3 to 5 years it will be interesting to say that there is a possibility of unlocking a lot of hidden what I would say technology and competence that we have in biotech. And again, another thing about which I am very excited, that my company traditionally has been very strong in chemistry. Incidentally, I am organic chemist myself, postgraduate in organic chemistry before I did my MBA at IIM Ahmedabad. So basically what really happens, there is also a possibility going forward of bio and chemistry working together and coming out with few products. So there are multiple opportunities which we exist as we go forward.
How far are we from a possible vaccine from Emcure?
As far as the vaccines are concerned, Sachin, it's a long drawn process. It takes years, because there are so many trials, which are involved, phase 1, phase 2, phase 3. So, I'd say work in progress.
Are you working on any molecules at this point in time?
We are looking at multiple options and working, in-house and also with global agencies.
So I was looking at your RHP, and one of the issues which came up was the working capital requirement, that you need a lot of working capital requirement of roughly around 2,370 odd crores, which is there, and your average working capital days is also higher at 128 days. What are you doing to bring down this working capital requirement and working capital days?
No, as far as working capital is concerned, what really happens, the company is generating sufficient cash. So as far as working capital is concerned, that is essentially required, for meeting the growth requirements, one. The second thing that happens, that as far as the domestic market is concerned, I think we are extremely efficient. Comparable to the peer group, But at the same time, what really happens, when we do business in the global market, as in emerging markets or Europe or Canada, there typically the working cycle goes beyond 125 to 180 days, depending on the countries in which you are involved. So that's the reason you see the sum total of working capital which is being deployed in India and other markets. And there, yes, efforts can be made to bring it down, but at the same time, I don't think we compare unfavorably with the peer group.
But you get only 47% of your revenues from overseas market, 53 comes from the domestic market. So it's still very high if at 128, even if you assume that overseas working capital requirement will be much higher.
50% comes from domestic, 50% comes, and again, Sachit, what happens, there is always scope for improvement.
Because your receivables are also at 102 days, that's my next point was that, it's more than a quarter of receivables your receivables are 102 days. So how does it work? Means are you working on reducing your receivables as well?
But as our receivables are concerned, as I told you that we are super efficient as far as India is concerned. But at the same time, when you're dealing in the emerging markets, it takes time, so that's a common industry practice, emerging markets, or even for that matter, Europe and Canada, it's a mix of everything.
My next question was on the capacity and the capex plan that you have. You've been investing in augmenting your capacities. Is there a further plan to increase investment and bringing in more capacities?
No, currently, we are not very aggressive, because as you have seen in the DRHP, we have invested sufficiently in last 3 years in expanding our capacities. So to that extent, going forward, the strategy will be to utilize the capacity, take them to the optimum level for which they have been created. And the second thing, that as far as the expansion is concerned, capex is concerned, that will be by and large, required for getting the balancing equipments.
Namita, I was looking at your product mix. Generics was around 40% of revenue, branded came at 52%, and branded patented was 2.7, with APIs 4.2% odd. We've seen increase in generic sales in FY24 over FY23, while branded generic sales have fallen. Is there a reason for that?
No, the focus will always remain branded generics, because in any basic business 101 is you always scale and make your sales where you have a strong USP, and science and innovation has always been Emcure's USP. You mentioned MedPure, we brought chirality to the market. So the focus will always be branded generics, where we have a differentiator through innovation, through technology and through science.
Okay. My final question is with respect to, you demerged your US business, the Heritage and the associate business into a separate entity. Is there any risk that comes into Emcure as a result of that? Because there's a class action which is pending, if I'm not wrong. What kind of risk is associated with that on Emcure?
Let me answer that question. As far as the company is concerned, Abbott Heritage was demerged in 2022, and as I'm speaking to you, everything is cleared. Whether it is civil suits or DOJ or whatever it is, absolutely, when I'm leading the company to go public, absolutely no baggage whatsoever.
Mr. Mehta and Ms. Thapar, thank you very much for joining us today on NDTV Profit. Your IPO is opening on July 3rd, closes on 5th. 960 to 1008 is a price band. It's a 1952 crore issue, which gives you a market value of over 19,000 crores at the upper end of the price band. Thank you for watching and being on IPO Adda.